What is going on, everybody? Welcome on into today's video. Things so far in the month of January have just not been looking great. As you can see by this current graph on our screen, what we are doing here is we are looking at our option trades on the Webull account. This does not account for every trade that we make. There are actually some trades here that we're not actually down this much in the month, but I wanted to use today's video to talk about what the fuck is going on in here and why it's actually not as concerning as it may look and why I'm not shitting my pants about this, to be blunt. So what is happening right now? We are currently operating in the month of January with a 26% win rate. Just atrocious. There's not much else that I could say, right? Like, that's just what it is. It's pretty fucking bad, right? So, and guys, and also one thing I want to mention too, the filter is going to slowly get peeled back this year in 2023. I'm not really sure why, but I just don't want to be like hiding the reality of just how I am. You know what I mean? For those who care or don't care, like there's no reason for me to try to like act super professional when there's like, that's just not me, number one, and I don't need to do that. But that said, if I were to peel back the layers and I went to the month of December, here is a look at the month of December. And I'm going to move myself to the bottom left so you guys can kind of see all this shit. But here was our December. Like, pretty solid, pretty consistent, pretty good. Okay? After a pretty shitty end of November. But that was because I made some horrible mistakes. Like, it was just a completely different ballgame. But here are the takeaways. In the month of December, we pulled about $1,700 in profit. I think we actually did more because there were some small caps in there, and there were some share trades. Actually, I think I've done better on just straight shares trades or swings versus options. I will not swing an option expiration that is like the same week or the next week. There's just no chance I'm going to do that unless it's a strangle or something like that where I can win both ways and I'm looking for a big move. But takeaways, 63% win rate. I think this is something that I think needs to hit home in terms of this game. Number one, you're going to get the reality, you're going to get the transparency of me going into the accounts and just showing you, yeah, could I fake this crap if I wanted to? I probably could. I could probably just import trades that were green instead of the red ones if I really tried, or I guess import days from Webull that were only positive, I guess, if I wanted to. But I show you guys the live account stuff anyway. Every single Saturday inside the Webull account, so you guys can see updates on all that stuff and other accounts and all that good stuff. Biggest takeaway, though, was, yeah, we had a 63% win rate, but check this out. Our average winner and our average loser were like actually the same, if not worse than 1-to-1, meaning that I was actually risking slightly more on average after the trades were done, after it's all said and done, than I was making on a given trade. Now, have we sized up? I guess I stopped doing this like weird, like sometimes I'd go smaller size because I'm just not really sure. Like, I'm just kind of trying to be consistent in the sizing across how we were doing it so far in the month of January. And so our trades are just net larger in terms of winners and losers. But what we notice is that we've had 11 winners, we've had 32 losers. Okay, so our win rate sucks. Our win rates literally flip-flop from instead of 62 or 63%, now we're at 26%. Okay, yet, what is going on? Like, what's the problem? I look back through the trades, and some of these days are actually a little bit more than others because I had strangles and whatnot. And some days I did trade a shit ton that I probably should not have taken, an extra trade or two here and there. And that adds up. And next thing you know, you lose an extra $50, $60, $80 on average on losers. And next thing you know, you're redder than you want to be. But what I've discovered as I was looking through some of these days and some of these weeks and some of these trades, I was looking through and I was realizing that, you know what? These aren't all terrible. And I marked them by A, B, or C. A being A game, it was a solid setup. It made sense. It was a great trade. Well, it doesn't have to be green if it was a great trade. It just was a solid trade. And then B being like, there was something that I could have done better in terms of either entry or my mental side of things and my stop and how I managed that. And then C being just stupid. It's impulse trade. I just took a random trade I was chasing. something like really bad that I know is not part of a consistent strategy, I did. And that's a C game, right? And that's how I've been kind of matching them. What I'm finding here is that we're not actually committing a ton of C game trades. It's just what's happening is that we are just on a losing streak, a straight up losing streak. Could I be more concise about what I'm following and what I'm trading? Probably. But as I've looked back through all of these trades and through all of these days, because I do that every single night or every week at least, at the end of the week and the weekend, right? At some point I get around to it. I found that they've all been pretty valid trades. For example, here's the day of Wednesday, the January 11th. A lot of stuff here, but these QQQs were initiated as new trades, but they're really the same thing. It's a strangle. And then these two that I closed were a closed strangle for some green on those. But as I look through, I had an upstart trade that went for $158. Probably could have called it quits right there, looking back, right? Hindsight 2020, yeah. Then I had just a bunch of losses after that. Not big. And all, as I looked back, all valid trades. I have yet to go back and mark them all, but all valid trades. And so I look at the difference between today and look at the difference between today and Monday when it was a green day. And I say, to be honest with you, there's nothing different other than the outcome of the trades going my way on Monday versus today. And keeping the risk in line, I'm actually doing a better job of managing the risk. I'm not having one blow up. I'm not having two trades that just blow the account, which if you were to go back to earlier on in this challenge or whatever you want to call it, and you went back to this month or this week, this rogue week in the month of November to finish it off, I mean, you had a trade here, two trades that were down 500 and down $600. We slowly were able to grind it back and make it all back and more in the coming weeks to come after that. But had I not done that and had I cut those off like I should have and stuck to the rules, right, it would be a completely different ballgame. And so what I'm trying to get the point across here is that the reality is of this game is, as I'm realizing, as I'm doing it more, because I come from a swing trade background, investing background, and I didn't really utilize risk management to the degree that it needs to be utilized from a day trading perspective, right? Which is what we're doing. Because what I realized was that, yeah, you can be an investor, you can be a swing trader, and that's great. And you can kind of catch bigger moves in the markets over time and stuff, and you can be a long-term investor, and you can kind of, build out a portfolio, and, that's something that you can do, and that you can't rely upon that, though, on a given day, week, or month, necessarily, right? So I was like, okay, well, this is cool. This is a great longer-term strategy. And yeah, could I be a good macro swing trader / investor, like a macro investor that is very, fluid and is able to move in, move out of stuff here and there? Yeah. And I will definitely do that over time, for sure. As I get more experience, as I see things better, and as I have, learned to play certain things in certain ways, right? I will come to find that, hey, when we're in a tightening cycle, I, like to short TLT, or I like to go this, I like to do that. You know what I mean? Like I'll have the things that I like to do, right? As my experience builds and as you kind of progress and mature as an investor / trader, which again, they're two different things, but some people like to classify them as the same thing, and they're definitely not. But for the purpose of this, yeah, sure. But what I'm realizing that from the realistic perspective, like yes, you'll see people out there that are doing really nice numbers and that are doing, go back to this month, that are very, very green all the time, that seem to be green every single day. But what I will tell you is that in actual trading, they're few and far between. Those are exceptional performers, number one. But number two, the reality is that this is not terrible. Like this is fine. When I go on a run of 2 weeks in a row, like you go back to December and you had like a 2-week span of being green every single day, but if you continue to stack the same risk reward trades, it just so happens that those 10, 20 trades all happen to work out, or most happen to work out. Right now, we're in a period where maybe the market's changing and I haven't adapted properly, which is something that I can definitely improve on. But we're in just a period where the same stuff that was working in December is just not working right now. Maybe it starts working in a week or two, or maybe it starts working in 2 weeks or 3 weeks, or maybe there's a change that I make that I realize, hey, we're starting to see this, this, and this, and I adapt that, and all of a sudden we have 6, 7, 8 in a row, or we have 6, 7, 8 green days in a row that go boom, 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 200, 100, 300, 500, boom. Next thing you know, as long as you've managed that risk properly and you didn't have that blow up like I had back in November, as long as you don't have that and you have a couple, you have losses, it is what it is, you can come back from that. No problem. And then the reality is that you look at the cumulative effect of the past month, quarter, year, and you go, hey, I had 3 red months, but I had 9 green months. And those red months were, let's say, 1,000, 2,000. But I look at my green months and they were 1,800, 2,500, 3,000. And you step back and say, this is literally what trading actually is. It's not about being right every fucking day. It's not about picking the right winners and having to be right and getting the direction correct. It's not about that. It's about the cumulative effect. And that at the end of the month, at the end of the year, at the end of the decade, you can look back and say, holy shit, I've progressed myself. I've gotten better. I've cut the fat out, which comes with time and experience. And as long as I've managed my risk, I've managed to get to a point where my winners are outweighing the losers. And it's a concept that you always hear, but when you actually start to see the numbers, it's super, super helpful. So hopefully this video is helpful in some way, shape, or form. I know it was kind of random, but I figured that I would make this because, you look at these numbers and holy shit, this guy sucks. I do, dude. I do. Right now, I suck. I'm in a rut right now, I guess, But then you look back and you say to yourself, well, last month was good. This month we're down a little bit. Actually, not as much. Last month we're up more. We're up probably a little over 2,000. If you were to go back to the month by month P&L, this is just tracking option P&L. I think with some small caps, a couple little things, they're probably up closer to 2,000, maybe more than 2,000. And then this month we're actually probably not. We're probably down maybe 1,000, maybe not 1,300 like we are now. And so to be honest, as long as we don't have a continuation of this, and even if we do, right, it's not the end of the world. As long as we kind of pick things up or we revert to some sort of mean into the final half of the month and you don't let this stuff compound and start to mess with you and start saying, okay, now I'm thinking differently, I'm acting differently because of these numbers, because of how I performed in the past, as long as you don't let that stuff get to you, right, this could be we're fine. You know what I mean? I'm not that concerned. But like always, I will keep tracking it. I'll keep logging it, and we shall see. And I'll keep updating you guys along the way. If you want to stay tuned, make sure you are subscribed. If you care, if you don't care, that's all good. Hope you guys have a great rest of your day. Thumbs up button. Any links and resources are linked up down below. This platform is TradeZilla. I don't have a link to them necessarily. It's paid. I'm not sponsored. Not really affiliated with them at all. I just have an account that I pay for. But you don't have to track like this. You can track other ways. It doesn't matter. You can track other ways. So it's not like it's the end of the world. And you can get you can export the files from your Webull accounts or from other brokers' accounts and download those and upload them to Excel files and whatnot and track everything that you want to track yourself as well. So they just make it a little bit easier on me, but that's that. So thanks so much for watching, and I'll see you guys in the next one. Peace out.